How a holding company can help you build and protect your wealth. Have you ever thought about how much of your wealth could be lost to taxes when you pass it on to the next generation? Hi, I'm Laurent Munier, partner and advisor here at Safe Pacific Financial, and we've been helping Canadian business owners hold, grow, and pass their wealth for more than a decade. Today, we're diving into a powerful tool for successful business owners, holding companies. So if you're looking to build wealth tax efficiently, you want to protect your assets, and you want to simplify estate planning, a holding company might be the solution you need. In today's video, we're going to cover what is a holding company and how does it work. We're going to cover the tax benefits of using a holding company, and we're going to talk about how to use a holding company for estate planning and for creditor protection. We'll also talk about common mistakes to avoid when setting up a holding company. Now, before we start, I want to say that setting up a holding company is not something that we do. You have to go to a lawyer to get the holding company set up. So today's video is just straight up value to you. We don't get anything out of this. It's just hard enough knowing what to do in business, and setting up a holding company is an important step in building your wealth. So I want to share. I have a holding company and lots of our clients do too. Holding companies work really well for holding the specialized whole life insurance policies that we talk a lot about in this channel. And well, I guess, yeah, we do get something out of it. It makes life easier for us if you have a holding company set up when you call us, but it's not necessary. You can call us before you have your holding company set up. Anyways, here we go. So we'll start with, what is a holding company? A holding company is a corporation that's created to hold investments. So stocks, real estate, shares of an operating business. The main goal of the holding company is to manage your investments in a tax efficient way and to protect your assets from creditors and other risks. How does it work? So the holding company doesn't actively run the business. Instead, it owns shares of other companies, or it owns assets. Investment income, so dividends, capital gains, they can flow into the holding company instead of being taxed at a high personal rate. So you can have your money from your operating company, and if you have profit in there, the profit can move to the holding company, and then this is where you use to invest. With retained earnings within that holding company, you can defer personal taxes, which allows your investments to grow inside the corporation without you having to take it out personally as a salary or a dividend. Some of the key benefits is this tax deferral. So investment income that's kept inside the holding company is taxed at a lower corporate rate than if you took it out and were taxed on it personally. So this allows for more efficient growth. There's an element of creditor protection. So assets in the holding company are shielded from the creditors of the operating company. So if somebody wants to sue your business where you're doing business and your money is over in a holding company, they can't get access to that. It also provides an efficient wealth transfer. So holding companies can simplify estate planning by enabling tax-efficient transfer of assets to your beneficiaries. There are tax benefits of using a holding company. And one of the biggest advantages of using the holding company is this ability to defer personal tax, especially on investment income. And here's how it works. So one, you get the tax-deferred growth. So dividends received from the operating company can be flowed tax-free into the holding company when both of these companies are connected. So this means that you can reinvest that income without triggering personal taxes, and it allows it to grow faster. Secondly, you've got a lower tax rate. Investment income that's retained within the holding company is taxed at a corporate tax rate, which is typically lower than your personal tax rate. And then this tax efficiency lets more of your money stay invested, and it lets it compound over time. Third, there's a concept called purifying the Lifetime Capital Gains Exemption, which is your LCGE. So if you're a business owner in Canada and you sell your operating business, using the holding company can help you qualify for what's called a Lifetime Capital Gains Exemption. And this allows up to $1.25 million in tax-free capital gains. So if you sell your operating company, $1.25 million of that can be tax-free when you use your Lifetime Capital Gains Exemption. By transferring your non-active assets out of the operating company to a holding company, it's called purifying the business to maximize this exemption. So like in simple English terms, say you have a dry cleaning business, and your dry cleaning business has been making money for a long time, and you've got your dry cleaning business, and then you've got $2 million of cash inside the company. Well, if If I want to buy that dry cleaning business, I don't want to buy your $2 million of cash. I just want the dry cleaning business. So move the $2 million to the holding company, purify the operating company, and then when you sell it, you just sell the dry cleaning business and your cash is over here. You can also use holding companies for estate planning. So investment holding companies are also powerful estate planning benefits. This helps to ensure that your wealth is passed on efficiently to the future generation. So one thing you can do is you can freeze your estate value. This is called an estate freeze. So by implementing an estate freeze, you lock in the current value of your shares, and then you can pass the future growth to your heirs in a tax efficient ways. And this is how it works. So you exchange your common shares in the operating company for some sort of fixed value of preferred shares. New common shares will capture the future growth, and they'll be issued to your holding company or directly to your heirs. And then this strategy limits that capital gain tax liability on your death, and it transfers the future growth tax efficiently. In simple English, say your company started at zero and now is worth $1 million. There's going to be a capital gain on that. But your company is going to continue to grow and you're expecting it to be worth more than $1 million in the future. What you can do is you do an estate freeze today, freeze your part of it at $1 million, and then we know this is going to be your tax liability. Then as your company continues to grow, the future tax liability will be held by the other shareholders, which are going to be your beneficiaries. So they'll have less of a tax to pay in the future, and we know what yours is now, and we can find a way to cover that. You can also have tax-free capital dividends. Holding companies can receive capital dividends in a tax-free way. So these funds can then be distributed tax-free to the shareholders, which offers a powerful tool for extracting wealth from the corporation without triggering personal tax. So you can see on our channel, we talk a lot about life insurance. And then when you have life insurance inside a corporation, so in this case, you'd have it inside your holding company, then when that life insurance pays out, it pays out tax-free to the corporation, and it creates a capital dividend account or a CDA. So that capital dividend account amount can then flow to the company's shareholders in a tax-free way. So that's a great way to pass on the value to your beneficiaries. You got to set it up the right way, but that's a great way to pass on that value to your shareholders, which would be your beneficiaries. It also simplifies estate transfers. So by consolidating your investments into a holding company, you can streamline the estate settlement process, which makes it easier for your heirs to manage and distribute the assets. It avoids the need to liquidate investments or liquidate businesses to pay estate taxes, and it preserves more of your wealth for those future beneficiaries. And I talked about earlier, there's an element of creditor protection, and it can safeguard your assets. So your holding company offers a layer of protection against the operating company creditors. And here's how that works, right? Because you're separating the assets. So by transferring investments or cash to a holding company, you separate them from the liabilities of the operating business. Creditor proofing strategies. So assets in that holding company are generally protected from the creditors of the operating company. So this reduces the risk of losing your personal wealth if your operating business faces legal challenges. And then you've got a life insurance shield. So by owning life insurance policies inside the holding company, you can protect the cash value and the death benefit from creditors of the operating company while ensuring a tax-efficient wealth transfer. And some mistakes. So common mistakes to avoid when you're setting up your holding company. So obviously the holding company offers many benefits, but there are pitfalls to avoid. And here's some of them. Number one is not purifying the assets. So if you fail to transfer non-active assets to the holding company, this can disqualify your business from the lifetime capital gains, right? So it could cost you up to $1.25 million in potential tax-free gains. Second is ignoring attribution rules. So improperly transferring assets between family members and the holding company can trigger attribution rules, and it causes unintended tax consequences. So very important to structure transactions carefully to avoid this. Also, you don't want to underestimate tax integration. So Canada's tax integration system is designed to ensure that income earned through the corporation and paid out to shareholders is taxed roughly at the same rate as if you earned it directly or personally. So without planning, you might not achieve those tax savings that you expect. So you want to work with somebody who knows what they're doing so that you do things the right way. Is a holding company right for you? Right? They offer big benefits for business owners and, say, real estate investors or incorporated professionals or high net worth individuals that are looking to build and preserve wealth efficiently. And if you have a significant investment or you own a business, a holding company could help you to save on taxes. It could help to protect your assets, and it can help to simplify your estate. If you want to learn more about this, fill out the form on our website, safepacific.com. That'll come to me, and somebody on our team will reply in 24 hours on business days. And then from there, we can book a meeting to get a better understanding of your current situation and what you're trying to do. Like I said at the beginning, we don't set up holding companies for you, but we have lawyers all across the country that we would refer you to set up the holding company so you know that it's done in the right way. I guess I need to say this, but technically, you could set this up yourself, like you can incorporate your own company by yourself, but we do not recommend that you do that. If you've got an operating company and you're trying to set up a holding company, it needs to be done right. Use a lawyer whose job it is to do this. They do this all the time. You don't want to do this wrong and then potentially lose out on some of the benefits of what the holding company is supposed to do for you. Or you find out years later that you did it wrong and then you need to go to a lawyer anyways. And then they're going to charge you a bunch of money because they're going to not just set it up, but they're going to have to like fix the mistake first and then set it all up. So it could end up costing thousands of dollars if you don't do it right. So we don't do it. Technically, you could do it yourself, but we recommend you don't. Call a lawyer. If you don't have a lawyer, contact us and we'll put you in touch with somebody good who can get this done for you. Really, we specialize in helping Canadian business owners. We specialize in helping high net worth families to build and protect wealth using tax-efficient strategies. What can you do for me right now? Please, please, please hit the like button. Leave a comment if you got a question and hit the subscribe button. The reason we ask you for that, because pushing on those buttons tells the algorithm that you like this video and it's going to share the algorithm to more people that are like you. This is very niche content and it's hard to find the people that want to watch this. So by you sharing it, it's going to go to other business owners, other higher net worth families that can benefit from this. That's it for me today. I will see you next time.